What's up guys, welcome to Glory Investing Show. Listen, let's cut right to the chase, since this week has been insane, at least when it comes to the stock market. A vast number of retail investors is investing left and right in unpopular stocks such as Gamestop and Bed Bath & Beyond or AMC, and this is the courtesy of Reddit community Wall Street Bets. Traders have bumped up the share price of these companies, with GameStop climbing over 1,000% in just 2 weeks. The market, which is in an extremely volatile state, has resulted in massive losses for some hedge funds. One of the most notable examples was Melvin Capital, which closed out its short position in GameStop on Tuesday, January 26th, after taking a huge loss. Furthermore, this trend appears to be spreading overseas. On January 27th, Finnish telecom firm Nokia got pulled into the frenzied market activity as its US-listed shares spiked as much as 40%. On January 28th, they were down around 13% in pre-market trading, while the company's Finland-listed shares were 5% higher. In a statement Wednesday, Nokia said it wasn't aware of any material or corporate developments that would account for the recent increase in the market price of trading volume of its shares. Strong demand for stocks featured on the popular subreddit was noticeable across the board, which now has 5 million users, up from 2.8 million. Keep in mind that rise in number of users happened despite the fact that the group was made private for a short period of time. The value of buy orders for GameStop during the first 2 days of this week were already 177% higher than for all of the last week. BlackBerry buys skyrocketed as well, seeing a 163% increase during that same period. Nokia has seen a rise on January 26th with over 56%. Brokerage firms have witnessed a surge in volumes, with the likes of Robinhood, Vanguard, and Charles Schwab facing major outages on Wednesday, January 27th. Similar issues have been faced by European trading platforms such as Trading 212. Trading 212 warned of disruption to its service due to unprecedented increase in demand. They also informed users that they were halting deals in GameStop and AMC, another stock featured on Wall Street Bets. In a tweet Thursday, the London-based firm has said it had temporarily stopped onboarding new clients due to unprecedented demand. Just like Trading 212, some other investment platforms started restricting trades in certain shares. Majority of them had restricted deals in GameStop and AMC and some other securities. And they all used the same excuse. It is in the interest of mitigating risk for a company and clients. This is making people furious. It is pretty much robbing investors and not letting them open or close their positions. One of those companies is Robinhood, probably the most popular company out there. Twitter users began posting screenshots of the Robinhood app that showed a message they were receiving about the stocks of GameStop, AMC, Nokia, and Bed Bath & Beyond. This stock is not supported on Robinhood. Robinhood's explanation was, in light of recent volatility, we're restricting transactions for certain securities to position closing only. What is this supposed to mean to us average Joe investors? How can they just choose to stop letting us buy our stock with our money? Well, I guess they can. Investors are being stripped of their ability to trade on the Robinhood app. Meanwhile, hedge funds and institutional investors can continue to trade as normal. Another company that did the exact same thing was TD Ameritrade. It is not uncommon for us to make such decisions, which we considered on an individual basis, in the interest of mitigating risk, the spokesperson said Wednesday via email. My personal interpretation of this message is, please don't get your 5 million Reddit friends to buy the same stock, because that will increase the demand and price will go higher and hedge funds will not like that. The fact that these companies implemented these restrictions raises one very important question. Is this market manipulation? By definition, market manipulation occurs when one intentionally or willfully does something that is designed to deceive or defraud investors by controlling or artificially affecting the price of securities, or when one intentionally interferes with the free forces of supply and demand. So what do you think? Are Robinhood and companies that did this guilty of market manipulation? Drop a comment below and let us know. Regardless of whether you think they committed market manipulation, a class action lawsuit was filed against Robinhood and some other companies in federal court. The investors who filed the lawsuit said that Robinhood's move to shut down buyers caused prices to plummet in favor of the big hedge fund investors, while seriously hurting the finances of the smaller investors. Melvin Capital and Citadel, two massive hedge funds, are also being sued based on the claim that they were shorting companies like Gamestop and losing a lot of money as the stock prices went up. The allegation is the fund conspired with brokerages like Robinhood to block the purchase of certain stocks in order to stop their financial losses. The suit alleges Robinhood's actions were done purposefully and knowingly to manipulate the market for the benefit of people and financial institutions who were not Robinhood's customers. What will be the final outcome of these lawsuits is yet to be seen. On the other hand, some companies are not placing any restrictions. Free Trade and Hargreaves Lansdowne said they were monitoring the situation, while eToro stated they will urge customers to be mindful of their actions and protective of their capital. The US Securities and Exchange Commission said Wednesday that it was actively monitoring the situation. We are working with our fellow regulators to assess the situation and review the activities of regulated entities, financial intermediaries, and other market participants, SEC Acting Chair Alison Heron-Lee said in a statement. By Friday afternoon, around 26,000 people had joined the class action. 4,000 had filed complaints with the Securities and Exchange Commission, and 400 had entered arbitration via Do Not Pay, according to Browder, who says he does not have a financial stake in GameStop stock. Thousands of investors are using a consumer-focused online service called DoNotPay.com to automatically join a class action lawsuit against trading platform Robinhood. The lawsuit was filed Thursday in the Southern District of New York after Robinhood temporarily restricted GameStop trading on its platform. That enraged many small investors who were trying to get in on the GameStop trading frenzy of the past few days. For all of you who have never heard about DoNotPay.com, they're a bunch of good people who will help you get your hidden money back, beat bureaucracy, fight corporations, and even help you with your new Nike shoes warranty problems. Hedge fund star suddenly found himself at the mercy of the day trading Reddit bros, who have become one of the most powerful, if improbable, forces in the stock market today. The attack on Plotkin's 6-year-old Melvin Capital shifted the balance of power in ways that would have seemed unimaginable only months ago. By Wednesday, the firm had capitulated to amateurs and covered the GameStop short. Well, Robinhood and others are now letting limited purchase of certain stocks. When I say limited, these are the numbers, guys. I'm not pointing fingers at Robinhood this time. There is a lot more going on here, and we have a chance to change it. Last time I checked,
This right here is the land of opportunity. Stratton Oakmont is America.
we can make financial institutions to regulate market better. Guys, please share this video with more investors. This is more important than any Dogecoin going up 800% situation. People don't understand why this is happening, and we have media telling them how a bunch of Reddit guys pump and dump the random stock. What do you think about all of this? Let us know what you think the outcome of this hectic week will be in the comments below. I hope that you liked this video. If you did, smash that subscribe button, and we'll see you soon, guys.